Hey everyone! Welcome! Thanks so much for joining us today. I'm really glad you're here. This session is part of the free sharing of crucial trading information based on my analytics of the trading books. I want to make everyone, including those who can't afford to purchase informative trading books, have access to trading information and strategies completely for free. To go along with that, kindly subscribe to my channel, Cryptocurrency World C.E.O. Tips, where I'll be taking you through this journey and sharing thoughts along the way. Note, I'm planning to have 2 to 3 live streams weekly for the Quick Market Update series, and I'm a founding analyst at Bitcoin Live, where I provide full market reports on a weekly basis. I've been doing that consistently for nearly 7 years now, and I never miss an update. This has motivated me to start this platform so that I can help more people with the information. Let us start by breaking down weekly crypto trends from Monday to Saturday. This will help you understand the best trading days in a week. Let's start with Monday from week 3. Stay single. Don't marry your bags. This quote plays with a bit of humor, but carries a serious message. In trading, it's incredibly easy to get emotionally attached to an idea. You convince yourself that you've discovered something unique, some hidden gem that others haven't realized yet. You might believe a token or stock that's currently priced at $5 is really worth $100 or even $500 if only people understood its value the way you do. But when you fall in love with an asset like that, you lose objectivity. You stop managing your risk. You ignore your stop losses. You refuse to sell when the trend turns against you because you're emotionally committed. The truth is, the market already prices in all the external factors: news, technology updates, and community sentiment. If those things matter, the chart will reflect it. So don't get married to your trades. Date your positions, get in, assess how things are going, and if it's not working out, don't hesitate to walk away. Stay flexible. Manage your risk. Protect your capital. That's the only way to stay in the game. Tuesday's quote is, "Without proper discipline, a trader is only as good as they are lucky." Discipline is everything in trading. It means having the patience to wait for the right setup. It means sticking to your plan even when fear or excitement tempts you to do otherwise. Maybe you've mapped out a great entry point, but when the price gets there, fear keeps you from pulling the trigger. Discipline is what allows you to follow through on your strategy, regardless of the emotional roller coaster. Discipline also comes into play when things go wrong. Maybe the market doesn't react the way you expected. Maybe your setup fails. That's when discipline means accepting the loss, cutting the trade, and moving on. Because if you don't have discipline, you're not really trading, you're gambling. You're just relying on luck. This applies to more than just trading, of course. In many areas of life, discipline separates the professionals from the amateurs. Now, for Wednesday, a real opportunity should hit you in the face. The best trading setups are obvious. They jump out at you. You don't have to squint to see them or force a narrative that isn't there. If you find yourself trying too hard to justify a trade, trying to make the pieces fit, that's a red flag. It probably means you're forcing it. In contrast, a truly solid setup will feel natural. It aligns with your system. It makes sense. It's compelling. And often, the simpler it is, the better. The harder you have to search, the more likely you're about to make a mistake. Let's keep going with week 3 of trading quotes and dig deeper into some key concepts. So here's something important to understand. When a trading opportunity is real, when it's high quality and worth your attention, it should be obvious. It should jump off the chart. For example, if you're in an uptrend and the price is testing a key support level, that's a textbook setup. That's the kind of opportunity that should hit you in the face. But how often have you looked at a chart and just felt uncertain, like something's off and you're not sure what to do? If you're not sure, that's your answer. That's not a real opportunity. The best setups are clear. You'll recognize them immediately. The more effort you have to put into convincing yourself that it's a trade, the more likely it is that you're forcing it. And often, that's not because there's a good trade. It's because you're chasing a sense of action. You're craving volatility. You're trying to satisfy that need for excitement or a dopamine hit. That brings us to Thursday's lesson. Keep in mind proximity to price when looking at moving average crosses. The further away the price is, the weaker the signal. This is a technical concept, but it's crucial. Let's break it down. Suppose you're watching a moving average cross, a bullish one, like a golden cross where the 50-day moving average crosses above the 200-day simple moving average in a downtrend. That's typically seen as a positive signal. However, if the price is already well above that crossover point when the cross happens, the signal is much weaker. Why? Because it's lagging. Moving averages, especially the longer ones like the MA50 and MA200, are inherently slow to react. They reflect past price action. By the time they cross, the market may have already made its move. This is why proximity matters. For a moving average cross to be a strong signal, the price needs to be near the point of crossover. That's where you'll find the best risk-reward setups. And remember, moving average crosses in sideways markets are often unreliable or muted. The cleaner the trend and the closer the price is to the crossover, the more meaningful the signal becomes. I've tweeted about these moving average basics before, and I encourage you to look at some examples. But the key takeaway is, don't overvalue a crossover when the price is far away from it. It might already be priced in. Now let's move to Friday's insight. To succeed as a trader, all you really need to know is how to use candlesticks and Bollinger Bands. This might sound overly simple, but there's truth to it. Bollinger Bands are a powerful technical tool, and when used alongside Japanese candlestick patterns, they offer incredibly effective signals. But you have to use them correctly. Let's say you're looking for a reversal. You might spot a hammer candle. Great. But for it to be valid, it needs to appear after a move down, ideally touching or piercing the lower Bollinger Band. That's when you get the best signal: an overextension of price, confirmation of volatility, and the potential for a bounce. The same goes for bearish setups. You'd want a bearish candlestick, like a shooting star or bearish engulfing candle, to appear near the upper Bollinger Band after a strong move up. Candlestick patterns that show up in the middle of the Bollinger Band channel, especially during sideways price action, often mean very little. The key is context. Candlesticks by themselves can be misleading, but when paired with Bollinger Bands, they become far more meaningful. And if you're going to use Japanese candlestick theory seriously, you should also familiarize yourself with classical charting techniques. It's not one or the other, it's both. By the way, Bollinger Bands were developed by John Bollinger, who wrote an excellent book on the subject. If you're serious about improving your technical skills, it's well worth the read. And finally, Saturday's quote: "Bull markets make geniuses. Bear markets reveal them." This quote speaks for itself. In a bull market, everyone looks smart. Everything goes up. Bad trades still work out. But in a bear market, the real test begins. That's where discipline, risk management, and true trading skill become essential. So that wraps up week 3. We'll be back next time with more insights from trading quotes. Make sure to subscribe, leave a comment, and let me know what you think. Let's keep learning together and continue to grow as traders. Because when we improve our skills, we improve our lives. Stay tuned for the next video. We're just getting started.